To build anything that truly lasts, it takes time.
To have you on the show. A very range-bound market, Amnish. On the upper end, we've been at that 25,200 mark, and the lower end is where we shut shop on Friday. Pretty uncertain times. What I want to talk about is the softness in earnings, Amnish, which is playing out. Other than ICICI Bank, I really don't see any dhamaka numbers so far, and of course, a few mid-caps here and there. What is your own sense on who's going to emerge the winner this earnings season? Because this week too, you've got a lot of heavy numbers and a lot of large cap Nifty names due to report their earnings.
Yeah, hi Aisha. So, you see, as you rightly said, so far the earnings season has been very lackluster. So, barring you can say a couple of banks which have done well, I think large majority of the companies, they have actually disappointed on numbers. And if you look at the commentary of some of the companies, say for example, what happened with Kotak or say Bajaj Finance, because some of these finances are actually the parameter of the economy, and they're the demand trends and they're the stress on the, you can say whether it is MSME or whether it is on the unsecured, that stress is very clearly visible. That is one. Secondly, on the demand side also, I think not many consumer companies have, say, so far given the results. But I think if you look broadly, I think I'm not very confident that many of them will beat the estimates. And I think for a large part of those companies, we will actually see some sort of, you can say, cut in earnings as we go along. So the similar, I think if you look at the two baskets, except some sort of, you can say, good numbers which might come from select, you can say, capital good stocks or some commodities, because the commodity companies have been showing better margins, whether it is, you can say, cement, some part of steel, etc. I think the earnings season so far has been very tepid. Demand has failed to take off. And the biggest weight in all the indices is financials. There also, I think the things are not looking great. And that is the reason why it is keeping markets in a very, very narrow zone.
All right, that's the take on the markets. But Amnish, what do you make of the pharma pack for now? Because the earnings were not that bad. Look at the numbers from Dr. Reddy's, even Cipla managed to surprise, and even Laurus Lab, where the experts have actually gone ahead and raised the target price, though the management has reiterated their FY26 outlook. What's your sense on the pharma pack right now, and do you believe it's this space to be, given a lot's happening in the other sectors and there are demand concerns?
You see, if you look at pharma, traditionally FMCG, IT and pharma, they have been considered as defensives, and as of now only I think pharma is one segment which is doing better in case of the entire defensive pack. And it is on account of, say, your reasonably good demand in the domestic and also on the overseas side where I think the things are good. But I think that I'm not very sure about. Some part of it might also be due to the fact that there might be some stocking ahead of, you can say, tariffs, because there is a lot of tariff uncertainty which is there. But having said that, as of now in the entire defensive pack, pharma is the one which is standing out. And yes, in certain cases, the valuations might not be cheap, but I think a select pharma stock which do well, where the number visibility is there, I think they will give outperformance from here on.
Okay. Well, there's surely one good set, and that's from Tata Chemicals.
Limited earnings and updates we've seen so far, especially from staples, like you have your Tata Consumer, you have Nestle. It's not looking all that promising, whereas by now, if you take a look at the management commentary last year, by now at least a recovery in demand was expected. Where are you seeing demand headed right now in terms of staples, and where do you think strength could return back to this sector?
Well, you see, as of now, it is quite uncertain. And 1Q also, you see, we had a favorable base because of elections, a lot of uncertainty. But at the same time, this year around, we had a lot, you can say, your monsoons got preponed. We had unseasonal rains happening throughout the month of, say, May in the heartland. So that also, I think, spooked the growth to some extent, not only in the consumer staples, but also in some part of durables. So I think the conditions are, I would say they could not have been better because your monsoon is normal, the interest rates have been cut, there has been some reduction in taxes. So the conditions and inflation, obviously that is running at say around 2.5% with food inflation on the negative side. I think one couldn't hope for better conditions for a recovery. But having said that, as of now, I would say it is not visible to that extent. And now, slowly and slowly, as we go along, we will, and this is what my sense is, we will see commentaries suggesting more on a recovery happening towards somewhere during 2Q or during the festival season. So it can be due to, you can say, some stress which is visible on the unsecured side, some stress which is visible on the MSME side, because the premium segment for the segment which the well-to-do or the affluent sections are using. So those segments continue to do well. But the other segments, they still remain under pressure, and it might take say another quarter or so more for things to stabilize. But yes, on the macro side, I think the conditions are ripe for the sector to start reporting better volume numbers.
Yeah, thanks for that take, Amnish. So that's for the consumption space. Seasonality for the fundraising via rights issue, preferential allotment or QIP, any of these methods. Now, Jio Financial Services, we have seen a range-bound momentum in this stock, but on a longer-term picture, conviction stays as per the experts. What's your view?
You see, we don't have any, you can say, numbers on Jio Financial so far. But having said that, Jio Financial in particular is trying to, you can say, grow big like has been with some of the other ventures of the Reliance Group. Now, whether it is with the asset management or you can say in the other segment of financial services. But as of now, I think it's a very nascent stage because there is very limited tangible business which they are handling as of now. So difficult to say give any, you can say, 1 year, 2 year numbers and all, because it will take time for the businesses to shape up. Yes, there could be, you can say, some need of funding and all as you expand, and that I think that is something you can say which can always be raised from the markets given the kind of brand equity which the group is having.
So that's a take on Jio Financial Services in that space. About a minute and a half to go for market open. And the pre-open, let's see what Kotak Mahindra Bank is doing. Almost a 5.5%, slightly more than that. 5.5% cut is what we're seeing on
impact, at least on the auto majors in the global market, as well as the eventual impact coming in for the domestic front as well. News flows coming in for auto sector. Is there a take which is there for the automobile space in particular, or you have kept the space in watch list for now?
You see, or in auto one needs to be very, very stock specific, because as far as your deal between your European Union, UK or US is concerned, I think it is not going to impact the entire sector. That is one. Secondly, a lot will depend upon how the India-US deal goes through in terms of, say, your exports and all from any of the Indian companies over there. So as far as the current, you can say, deals which are going through, it might be beneficial for Tata Motors, but might not be for others. But the mainstay of the Indian auto companies has been on the, you can say, the domestic side, where if you look at the entire, you can say, pack. In two-wheelers, it is Eicher Motors, and in case of your PVs, it is the M&M, which is actually doing well, and with monsoons also being good. So there could be some momentum over there. So I think it's very difficult to, you can say, give any single point, you can say, very difficult to paint everything in with the same brush. But having said that, as I said, for consumers, consumption space, I think all those factors do play for the auto, whether it is interest rates, tax cuts, your inflation and all that stuff, which ideally should be positive for them. But having said that, the groundwork is there, but one needs to see how in the coming festival season in particular, the auto sales go. But as far as if you go by the current numbers, M&M and Eicher are the two stocks which really continue to look good.
All right. So M&M and Eicher, they continue to look good. And yes, of course, the earnings for both of these majors is through this particular week. So all eyes on that. But the IT pack is definitely reeling under pressure. And Sharon, take a look at what is happening with Wipro, where the earnings were actually boding well. And even just the reaction of that, we have seen the stock going up. But seems like the up move has absolutely fizzled out, because it's not just Wipro, Infosys, TCS, HCL Tech, and even TechM. Out of the top 10 Nifty 50 losers, 5 of them are from the IT pack. Any particular stock where you believe still offers a good shorting opportunity from this point in time, and do you believe that more could be in store for the IT space?
So, Shishti, I would not suggest shorting. Definitely, Nifty IT is in a bear market. It's trading below, I think it's corrected more than 20% from its highs. So I think people will see some kind of value, and I think more or less they are more towards making a new bottom rather than making a new short. So I would suggest don't go short, but definitely if someone has a position, they can look at exiting these counters and going towards a stronger sector like a PSU bank or a Nifty bank, where they can see some kind of upside when the Nifty recovers from these levels. So please do not short these IT stocks. They are already beaten down quite a bit. Maybe you will get a 1 or 2% kind of downside, but if the market recovers, your stop loss will be hit very fast. So do not short, but do exit and shift to decent sectors like the pharma, PSU banks, even Nifty banks, as a matter of fact. Next 3 to 6 months are going to be very good for these sectors. And I think you can see some kind of recovery coming in the next 2 or 3 weeks in these sectors.
Right, so Pharma looking good. And Sharon, just on that note, Torrent Pharma is also at its new all-time high right now. The stock is also going to be in focus on the back of the news flow that the board is going to be meeting today to mull their fundraising plans as well for the year ahead. So Torrent Pharma continues to be in focus. Along with that, a fresh new high coming in for Aadhar Housing Finance as well. Sharon, a quick chart check on both of these stocks, Torrent Pharma and Aadhar Housing.
So, Sneha, Torrent Pharma is already trading all-time high. So I think you can see higher levels. They have done a great acquisition recently, which will come in play in the next 2 to 3 quarters. So I'm quite positive as it is on the pharma sector. And Torrent Pharma is showing clear signs of leadership. In terms of Aadhar Housing, I think we recently spoke about it. It did correct back to around 490 odd levels and has now quickly reversed from those levels. Again, a new all-time high coming in today. The stock counters looking
to a $69 a barrel mark. There's a lot of global scenarios which are impacting the equity as well as the commodity markets. But let's take a look at the oil marketing, oil exploration and oil producers. And Amnish, need your view over here, because at present, if we see ONGC, HPCL, IOC showing signs of sharp upsurge, however, the oil refiners are tanking down in trade. Any crude related counters, space sectors on your radar? Amnish, kindly unmute yourself. Yeah.
So due to the benign crude prices, I think if you look at all the companies which are into oil marketing, okay, HPCL, IOC, etc., I think over the past few months, so these stocks are something which have done well, where the numbers expectations is also built in. So a lot here will depend upon how the crude prices behave. So if you look at you can say your oil exploration companies, then I think Oil India is one where we have been positive in the past. But if you ask me, I think if the oil prices remain benign, then some of the your refining and particularly the marketing companies, I think there the loss. Your refining and particularly the marketing companies, I think there the losses will not be come from marketing, and I think those are the counters which can see some sort of a stability or an upside from here. Although in the last 2-3 months, I think they have done quite well.
All right, that's about OMCs. But Amnish, just wanted to have your take on the whole defense pack, because today, of course, BEL will be in focus, coming out with the numbers. But of late, Amnish, if you look at the stock movement, case in point being BEL, Must Talk, these counters have been lagging behind, and they have been seeing a bit of a U-turn from those higher levels. Do you believe that much of the optimism with respect to their order book, growth trajectories already in the price right now, and any expectation with respect to BEL?
If you look at all the defense stocks, particularly after Operation Sindoor for the next 1.5 months, I think there was a very sharp rally in many of these stocks, and many of them actually gave 20-25% kind of return also from those levels. So I think sometimes what happens is that the stocks go up, but the fundamentals actually they will take time to, you can say, catch up with the stocks. Now the order books are growing, the growth is there, but it is not that your numbers are going to dramatically change from here. So in the long term, these stocks continue to look good. Whereas in the near term, many of these stocks will say sideways to make movements. And that is a part of, I think, what happens naturally with many of the stocks.
Okay, so that's the take on some of the defense counters. Today, other than that, what's doing well, pardon me, is RBL Bank. That stock is up about 3%. Sharan, what's your take on RBL Bank on the charts? This one has been a steady performer. What are the next targets you're watching out for?
Play on the charts, I think it's looking